At the street level or the online level, what does that inflation print tell you about the direction of travel right now, Rachel?
Yeah, with the results just coming out, it's really interesting to think about why we're saying inflation might be going down. If we look at food and consumer good categories like appliances, those have been relatively flat. But when we remove that from the equation, inflation is still going up. And the reason why we're seeing categories like food and appliances stay relatively flat is that for the last few quarters, brand manufacturers have been raising prices. And the reason why they've been raising prices is that it's more expensive than ever before to bring consumer goods to market, to keep them on the shelf and to market them to consumers. To offset those margins, they've been raising prices, which is why at MikMak, we feel core inflation is more indicative of what's happening in the general economy. And when we look at that inflation continuing to go up against e-commerce conversion rates, what we're seeing at MikMak is that year over year, e-commerce conversion rates have been declining since 2020. And to put it into context, in 2021, the average e-com conversion rate we saw at MikMak was 7.4%. We're now halfway through 2023, and the average e-com conversion rate is at 4.8%. So it's showing that consumers are more trepidatious to buying right now.
Yeah, what does that mean in terms of companies' trepidation about marketing? An interesting headline just crossed the Bloomberg. Netflix is going to open a pop-up restaurant, apparently, called Netflix Bites in LA. I mean, of course, that's a marketing focus. It's itself a company that's taking in advertising, in fact, dollars from other companies now. How willing and able are companies to experiment in this environment if the conversion rates are pretty low?
Yeah, I think for most big brands and brands that understand what it takes to stand the test of time, you have to advertise during trying economic times. Look in Procter & Gamble. They've proven that over 100 years. That being said, every dollar is being scrutinized right now by folks that hold the title like CFO, and they're holding the marketing teams accountable to driving business results, which has created a perfect tailwind for the rise of retail media. Meaning Meta's biggest competitor isn't just Snap or TikTok, it's also Amazon, Target, Walmart. And what the retailers have at their advantage is consumer purchase data and their ability to monetize that data and say, hey, we know who needs to replenish diapers right now. So if you have $1 to spend to market diapers, you should give it to us over a platform that may not know that. So from a marketing standpoint, we're continuing to see brands spend, but they're spending in more strategic channels that have more visibility into the end sales data so they can understand marketing effectiveness.
Rachel, we're showing on the screen, the difference in direction of travel between goods and services inflation. And you learn in a recessionary and an inflationary environment that who is leading who? That there's a response to the consumer and their change in behavior, but there's also the reaction from the retailers themselves. Based on what you see in the market, who moves more quickly? The consumer to change habits or the online retailer to respond to them?
Yeah, it's a give and a take, per your point. But right now, what we're seeing in terms of how consumers are spending is they're really spending on essentials. At MikMak, we have over 3,000 retailers in the network, and we collect basket-level sales data. And so we can tell you right now what America's buying: bottled water, granola bars, teeth whitening kits, press-on nails, and weed killers. And what that shows you is, hey, these are essential items. But when it comes to things like beauty, for example, you could go to the salon to get your nails done, or you could buy on press-on nails at Walmart. And so in some of these discretionary categories, we are seeing consumers be more choosy with the things that they're willing to do on their own versus go to a more service-oriented place.